Hello, everyone. Welcome to the market opening bell on Monday, October 20, your 10-minute guide to the stock market. The market is closely monitoring developments in US China trade and negotiations. Last Friday, tech stocks faced significant pressure in the afternoon, dragging the Hang Seng Index to a low of 25,145 points, down as much as 744 points, before closing at 25,247 points, a decline of 642 points or 2.5%. The X-share index briefly fell below the 9,000 point mark, hitting a low of 8,973 points and closing at 9,012 points, down 247 points or 2.7%. The Hang Seng Tech Index dropped to a low of 5,733 points, closing at 5,760 points, down 244 points or 4.05%. Total market turnover reached 314.6 billion Hong Kong dollars, with Southbound trading turnover at 153 billion dollars and Southbound net inflows amounting to 6.303 billion dollars compared to 15.822 billion dollars the previous day. In terms of southbound fund flows, Meituan saw the highest net buying at 1.149 billion, followed by Tracker Fund at 937 million, CNOOC at 539 million, Xiaomi at 414 million, and PopMart at 394 million. On the other hand, Alibaba experienced the largest net selling at 2.153 billion, followed by SMIC at 1.578 billion, Hua Hong Semiconductor at 892 million, Tencent at 366 million, and ZTE at 161 million. Southbound funds have been net buying Xiaomi for 10 consecutive days, totaling 7.402 billion, and PopMart for 4 consecutive days, totaling 1.468 billion. Meanwhile, SMIC has faced net selling for 7 consecutive days, totaling $9.101 billion. Hong Kong's 3 major indexes have now declined for 2 consecutive weeks, with the Hang Seng Index falling 1,043 points or nearly 4%. The X-share index and tech index dropped 3.7% and 8% respectively. Southbound funds recorded a net inflow of $450.89 billion last week, marking 22 consecutive weeks of net inflows and the highest in 5 weeks. Among large cap tech stocks, Xiaomi led with $3.582 billion in net buying, followed by Meituan at $1.956 billion, while Alibaba and Tencent saw net selling of $2.953 billion and $1.894 billion, respectively. Technically, the Hang Seng Index is forming a pattern of lower lows and may test the 25,000 point level. If this level is breached, the next support lies at 24,650 points. However, news regarding US-China trade talks and the fourth plenary session could disrupt technical trends. For example, Hong Kong's ADR predicted a high opening of 580 points for the Hang Seng Index at 25,828 points on Monday, so investors should remain vigilant for potential sharp market swings. In the Asia market, the 3 major indexes opened 0.1% to 0.4% lower on Friday, with losses widening as the day progressed. Closing near their daily lows, the Shanghai Composite Index ended at 3,839 points, down 76 points or nearly 2%. The Shenzhen Component Index closed at 12,688 points, down 397 points or 3%. The Chinese index fell to 2,935 points, down 102 points or 3.4%. Total turnover in Shanghai and Shenzhen markets reached 1.9381 trillion yuan. For the week, the Shanghai Composite declined 1.5%, the Shenzhen Component fell 5%, and the Chinese index dropped 5.7%. The renminbi central parity rate was raised by 19 points to 7.0949 against the US dollar, hitting a 1-year high. The market is awaiting updates on US-China trade dynamics, with China set to release third quarter GDP and September's 3 carriages economic data on Monday, October 20th, alongside the opening of the fourth plenary session, which will conclude on Thursday, October 23rd. China's third quarter GDP growth is forecasted at 4.7%, a notable slowdown from 5.2% in Q2 and 5.4% in Q1, though the year-to-date growth of 5.1% aligns with the full-year target of around 5%. For the three carriages, September industrial output is expected to grow 4.9% year-on-year, retail sales by 2.9%, and fixed asset investment for the first 9 months is projected to be flat. Gold prices surged past 4,300 US dollars, hitting a new high, though gold mining stocks show mixed performance. Zhaojin Mining fell 2.5%, while Zijin Mining International rose 0.3%. Gold jewelry stocks performed strongly, with Chow Tai Fook jumping 5% to 16.52 Hong Kong dollars, marking the top performing blue chip stock. Laopu Gold rose 3.1% to 828.5 Hong Kong dollar, briefly climbing over 5% to $846, a high not seen since September 9th. Laopu Gold announced a product price adjustment effective October 26, marking its third price hike this year after increases in February and August. The company typically adjusts prices 2 to 3 times annually. Currently, many of Laopu Gold's offline stores have sold out of plain gold jewelry, and several online products are out of stock. Zijin Mining International reported producing 32 tons of mined gold in the first 9 months, with net profit of 905 million US dollars. For the third quarter alone, net profit was $385 million. Looking ahead to Q4, the company aims to capitalize on rising gold prices, focusing on increasing production, improving efficiency, tightening cost controls, optimizing gold recovery rates at its mines, and ensuring a smooth transition for the newly acquired Rego Rodok gold mine in Kazakhstan. China Life Insurance issued a positive profit alert, expecting net profit attributable to shareholders for the first 3 quarters to range between 156.785 billion yuan and 177.689 billion yuan, a year-on-year increase of 52.262 billion yuan to 73.166 billion yuan, or 50% to 70%. This growth is attributed to a recovering stock market, with the company seizing market opportunities to increase equity investments, actively deploying mid to long-term capital, and strategically investing in new productive forces, optimizing its asset allocation structure to boost investment returns. Hi-C New Drug, originally scheduled to list on Friday, October 17, delayed its listing to today due to additional time needed to finalize announcements and obtain regulatory approval. For Phillip Mark's grey market trading arrangements, if the listing is cancelled, all client trading instructions will be voided. If delayed, executed trades will remain valid. U.S. Treasury Secretary Scott Bessent held talks with Chinese Vice Premier He Lifeng, describing the discussions on U.S.-China trade issues as candid and detailed, with plans for further talks this week. China issued a report criticizing the U.S. for politicizing trade issues and urged the prompt removal of tariffs and other non-compliant measures. U.S. stock markets rose on Friday, with the VIX Fear Index dropping 4.5 points or 18% to 20.78. The Dow Jones Industrial Average gained 238 points or 0.5% to 46,190 points. The S&P 500 rose 34 points or 0.5% to 6,664 points, and the Nasdaq increased 117 points or 0.5% to 22,679 points. The Nasdaq Golden Dragon China Index, reflecting Chinese ADRs, fell 11 points or 0.1% to 8,165 points. For the week, the Dow rose 1.6%. The S&P 500 gained 1.7% and the Nasdaq climbed 2.1%. Large cap tech stocks show mixed performance, with Apple rising 2%, Nvidia and Meta Platforms gaining less than 1%, and Tesla advancing 2.5%, while Amazon dipped 0.7%. Regional bank stocks rebounded after being hit by credit exposure concerns, with the market betting that bad debts are isolated rather than systemic. Jefferies Financial and Science Bank Corp each rebounded nearly 6%, and the regional bank ETF rose 1.6%, though it still ended the week down about 2%. Our stock pick today is China Traditional Chinese Medicine, stock code 570. China Traditional Chinese Medicine primarily engages in the research, development, production, and sales of traditional Chinese medicine, TCM, and pharmaceutical products. Its operations span five major segments: Chinese medicinal herbs integration business, TCM decoction pieces, concentrated TCM granules, TCM finished goods, and TCM Great Health. In the Chinese medicinal herbs integration business, the group continues to expand the construction of good agricultural practice (GAP) bases to meet development needs. As of June 30, 2025, it has participated in establishing 162 TCM raw material production bases across 22 provinces, regions, and cities, covering 109 TCM varieties and spanning over 459,000 mu, approximately 30,600 hectares. Of these, 95 varieties are integrated into the TCM quality traceability system. Additionally, 24 seed and seedling breeding bases have been established, covering 2,347.5 mu and involving 22 key TCM varieties. Leveraging its TCM full industry chain quality technology service platform, the group has built a closed loop quality traceability system encompassing seeds and seedlings, TCM raw material production, industrial processing, and sales, center on the Chinese medicinal herbs production quality traceability system and the TCM industrial production quality traceability system. In the TCM decoction pieces segment, the group is actively deepening its regional presence, strengthening cooperation with existing clients, and expanding into the medical terminal market, adding over 400 new medical terminal clients. It has also solidified its competitive edge in specialized TCM decoction piece operations, achieving regional leadership in Beijing, Shanghai, Guangdong, Shandong, and Guizhou, while accelerating regional integration and collaborative development. The group's shared TCM Intelligent Distribution Center has driven significant growth in decoction piece sales, particularly in the medical terminal market, resulting in substantial revenue increases. Concurrently, the group has adjusted its sales strategy, focusing on toxic decoction pieces and protected wildlife based decoction pieces to explore new varieties and clients, continuously enhancing market expansion and product structure optimization. In the concentrated TCM granules segment, the group is intensifying academic research and clinical applications by analyzing pharmaceutical properties, accumulating evidence of efficacy advantages, and promoting substitution solutions to build an evidence chain, thereby increasing doctors' recognition and acceptance of concentrated TCM granules. It is also steadily advancing the development of comprehensive hospitals, improving terminal coverage, and enhancing client retention. In the TCM finished drug segment for prescription drugs, the group focuses on increasing direct sales to terminals and deepening market penetration. For over-the-counter OTC drugs, it has expanded its online presence, completing system integrations with multiple core e-commerce platforms. Additionally, it continues to refine its nationwide chain client network, concentrating resources to strengthen partnerships with key chains. In the TCM Great Health segment on the product side, the group focuses on distinctive varieties, premium decoction pieces, and medicine food homology varieties, while expanding and integrating marketing channel resources. In its TCM medical institutions, it provides comprehensive and diverse TCM health services centered on TCM products and technologies, Recommended buy price 2.52 Hong Kong dollars. Target price $2.75. Stop loss $2.4. I do not hold the aforementioned stock.